Cerebras jumped 1%. Lab scores at 55 out of 100. Hold. The CS3 packs 44 gigabytes of SRAM directly on the wafer, crushing the memory bottleneck. Yet the market only nudged 1%, signaling doubt despite the hardware advantage. The lab's full teardown exposes how that SRAM cache reshapes AI compute economics and why rivals can't copy it overnight. Pre-market alert: Cerebras, CBRS, plunged 11.2% as soft guidance exposes the fragility of its single-wafer hardware Moat. The lab's focus is the WSE3, the wafer-scale engine, a massive 46,225 mm superscript 2 chip that occupies an entire silicon wafer to eliminate interconnect latency, the delay in data moving between separate chips. While NVIDIA's Blackwell B200 relies on CoWES, chip-on-wafer-on-substrate, a packaging technology that stitches two dies together, Cerebras's one-chip-per-wafer strategy faces a brutal physical wall. A single manufacturing defect can ruin the entire unit. With 56 times the die area of an H100, the yield percentages, the ratio of functional chips to total produced, are mathematically punishing. Guidance cut confirms that engineering complexity is finally hitting the income statement. By Q4 2026, intensifying U.S. export controls on advanced AI silicon will compress Cerebras's revenue growth by at least 300 basis points as Middle Eastern diversification hits a regulatory wall. The lab is tracking a dangerous concentration. UAE-based G42 remains the primary lifeline, but with the Fed holding rates at 3.63% and the yield curve normalizing, returning to a state where long-term rates are higher than short-term ones, the cost of carrying this $50 billion valuation is rising. Meanwhile, looming Trump tariffs on high-tech imports act as a friction force against the global supply chain. With a 7.8% recession risk priced in, capital is rotating out of experimental Tier 3 hardware and back into proven cash flows. The macro wave is no longer lifting all boats. It is drowning the outliers. Cerebras reported earnings per share of negative $0.04, beating the Wall Street estimate of minus 0.16 by 75.7%, a solid beat that signals strong execution. Cerebras Compute is trading below its 20-day average at 200. Pre-market alert: Cerebras just erased 11.2% because management's guidance language flipped from demand to supply in the same breath. Management's headline: data centers, not chips, are AI's biggest bottleneck. 6 words that appear in every press release and earnings call. What that phrase is designed to make investors feel: that Cerebras is the only company solving the real constraint, so revenue is infinite. What it is designed to make them not think about: gross margin. The lab decode: insider activity, 0 Form 4s in 90 days. That is not a buy signal. It is a credibility gap for a newly public hardware company. EPS beat plus 75.7%, but the beat streak is 1 quarter old. Wall Street hears one-hit wonder until proven otherwise. The momentum breakdown for Cerebras: RSI sits at 47, pointing to neutral zone, waiting for a clear directional signal. MACD is currently bearish, with downward histogram pressure. The bull case hinges on the CS3 bypassing the memory wall, the physical speed limit between processors and memory, using 44 gigabytes of on-chip SRAM. But here's what breaks it. ARK Invest just trimmed 1,158 shares while short interest hit 17.2% of the float, the shares available for public trading. The pro question: can Cerebras survive without a software moat like NVIDIA's CUDA, the platform that locks developers into specific chips? The lab says no. Niche hardware cannot beat a global ecosystem. We called a hold at $240.90, correctly predicting this 5.9% slide. If Cerebras fails to land a second major customer by Q4, expect a drop to $201.01 support. AI score: 55 out of 100. Avoid the falling knife. Here's the macro picture shaping Cerebras. Strict U.S. export controls on advanced AI chips to China force Cerebras to rely heavily on Middle Eastern buyers like UAE-based G42, which currently accounts for the vast majority of its revenue. This concentrated customer base leaves the company highly vulnerable to sudden shifts in Washington's foreign policy and national security reviews regarding Middle East tech partnerships. While NVIDIA builds AI systems by linking thousands of small chips together like Lego blocks, CBRS carves one giant, dinner plate-sized superchip that processes data instantly, without any connection delays. However, NVIDIA's massive software ecosystem makes it incredibly easy for developers to use, creating a steep uphill battle for CBRS to convince customers to switch systems. The upcoming launch of their third-generation CS3 system could trigger a massive sales surge if it delivers on promised speed gains for training giant AI models. Conversely, any manufacturing delays at TSMC, the silicon foundry that physically prints these massive chips, represents a critical risk that could instantly freeze shipments and damage investor trust. CBRS holds steady with a 55 score, signaling mixed momentum. Where do you see CBRS in 30 days? Up, down, or flat? Drop your call. This is not investment advice, it's purely educational content. We encourage you to conduct your own thorough research, verify any data you use, and understand that past performance never guarantees future results, especially in volatile sectors or market conditions. If you want our full breakdown on NVIDIA, the link is in the description. Subscribe so you don't miss Thursday's deep dive. We're tearing down Micron.